When you signed up, Michael?
About 70 something. 72, 75, I believe.
You changed the mug, Ollie.
I did, yeah.
Okay, so we are live. So let's give it a few minutes for people to join, and then once people join, we can kick this off. While we wait, we can talk about coronavirus and everything that's happening in the world. Barcelona opened up a few days ago, meaning that we have practically zero restrictions right now.
We saw on the news the dancing on the streets.
Yeah, yeah, I was there, but I was there just out of curiosity, actually, more than anything. Everyone in the city said we're going outside at 12 at midnight, because that's when, like, officially at midnight 01 the curfew ended, so on Saturday. So as you can imagine, everyone waited, and Sunday morning 0001 everyone just went to the streets. Yeah,
Big party.
not really. The news actually just like pumped it up a lot. Like it was very siloed. You had like very like small groups like left and right, but I think the camera guys just got inside those groups and took the right pictures and the right videos at the right angles, and it seemed as if it was like New Year's outside, but honestly it wasn't. You went away 5 meters and that's it. And that's it.
And do you still have to wear masks?
Yeah. We still need to wear masks. So no, that in that sense, everything is as usual. It's just the restaurants are open non-stop, basically. Well, until 11. There's no curfew. It's sunny outside, so the Barcelona life.
Very good.
Mm-hmm. I haven't been timing how long we've been waiting.
3-4
Should
minutes.
we start, or do you guys want to wait another? Okay, let's wait another 3-4 minutes. So let's start at it's 7:04 here. Let's start at 9, 8, 9. Yeah.
Sure. Yeah. So it's been 3 or 4 minutes since we sort of pushed it live. So depending on what we want to do. Here in Ontario, we're under full lockdown, as much as you could kind of be. Like nothing's open. It's only like essential. Even if you get to like a Costco or whatever, they've roped off like the TV section, in the clothes section. It's completely insane. But we're a bit behind on our vaccine rollout compared to the States, or compared to the UK, probably compared to Europe as well. We're a bit behind, but hopefully that changes, because the States now basically have oversupply. So I'm hoping they push that north of the border. Fingers crossed.
Yeah, it's been disorganized everywhere except in the UK and in the US.
Yeah.
Everywhere else, it's been a lot of promises and not a lot of accomplishments.
Well, they really had to, accelerate it, because their cases and their deaths were so much higher than other places.
Where, in the US?
In the US and the UK, yeah.
But at the same time, when people say that death toll in the US was higher, yes, it was. But at the same time, look at the size of the country and look at it. It's the same as saying like taking the total death toll in Europe and adding all the countries of the European Union together. Then you would kind of be like around the numbers of US. So
yeah, no, they were still pretty high. I mean, I on the New York Times app, for example, they had this counter, and every day like thousands of deaths and 6-figure new cases. So it was quite severe there for a while, definitely.
Mm. Yeah, well, it's not a great period for anyone. That's
Yeah. Hopefully it's behind us now.
Yeah.
hopefully. Hopefully we're still not out of it yet, not fully, but we're getting there. We're getting there. So how's your fundraising going?
Good. We're at 49%. So we've gone from this morning. I think we were under 40% this morning.
Were we 42? I think, because I think I posted, and we're at 49 now. So yeah, it's great. It's really exciting. I mean, I'm sure you've done this yourself, Michael. It's really exciting to refresh the page, and the numbers up higher and higher and higher every time. So we're just at that nice phase there.
I know
Slightly addictive.
Yeah, I was laughing at you saying, I'm not sitting here scrolling and refreshing. Oh yes, you are.
I know that feeling. But I can say this, like, I was very, very happy to click end campaign when we ended our campaign, and that said it was closed. Because honestly, it was a lot of work, and
it is, isn't it? Yeah, and it's consistent day after day after day. So. I mean, Ollie, we've been at this since February, really, since we started preparing all our collateral, so, I mean, it's great, and it's been a great campaign, and it's a really good exercise, I think, to examine your business from such a critical eye, but it'll be great when it's over too.
Yeah.
Definitely.
Well, it would be great if it's over, and if you reach your targets and overachieve your targets.
Yeah. We're hopeful. We're hopeful of that. We still have a bit to go, a few more tricks up our sleeve, a few more, announcements, and some more PR to come in. So we're hopeful.
Yeah, we've 27 days to go, and we're talking to about 6 or 7 people who between them could fill it. So I'm really hoping to hit that minimum target.
Is it? Are you guys doing like an equity round, or is this a convertible loan, or what is it?
It's called a SAFE. It's a style of convertible loan, but it's
I know it.
You're the first person I've said it to that knows it, so it's good.
Yeah.
Well, SAFE is very Silicon Valley.
Exactly. Yeah.
I'm actually surprised that this is like they're doing SAFEs in Europe, because that's
as far as I can gather, we're the first company in Ireland to do it.
Okay. Wow. Okay.
But the NDRC here, which is like the National Tech Accelerator, they're doing SAFE for all the next cohort. So it's
oh right, yeah.
It's getting through, but it's a bit tricky to explain when somebody hasn't heard of it before. It's
Interesting.
basically a convertible loan note, but it's tax deductible. So
that's the big attraction for the investors. That was our kind of struggle to find a model that ticked all those boxes.
No, interesting. No, we did a convertible loan, so
right,
the classic European style. So I think it's 12:09. I think we've given it enough minutes, enough time. Let's kick the event off. Okay. So for everyone that has joined us, welcome. This is Nebeus's 4th Fireside Chat. This Fireside Chat is called Cash versus Crypto in 2021. I am Michael Stroev. I am the COO and Head of Product at Nebeus. We have my colleague with me, Peter Woodard. He is our CBDO. We have Ollie Walsh, who is the CEO of Pipit Global. And we have Clare Tracy, who is the Head of Marketing at Pipit Global. Pipit Global are Nebeus's partners. And thanks to Pipit, our users can add funds to their accounts, add cash to their accounts at retail locations around the world, which is a absolutely unique feature that Nebeus has. As the name of the event suggests, we're going to be talking about cash versus crypto, the present of cash, the future of cash, the present of crypto, the future of crypto, and how the two worlds will coincide. In terms of Nebeus, Nebeus is a crypto-backed loans platform, and we allow people that have cryptocurrencies to use those cryptocurrencies to get loans. But we also have a whole array of fintech and crypto features available on our platform. Ollie, I'll leave you present Pipit Global.
Thanks, Michael. Yes, I'm Ollie Walsh. I'm the co-founder and CEO of Pipit Global. So we're an international cash transaction platform. So as Michael said, we can enable loading cash into e-wallets, but we also load cash internationally into bank accounts for migrants who are unbanked where they live. We can do cash payments for e-commerce orders and cash payments for bills. So a lot of our partners are e-wallets, but it's mainly cross-border payments that we do. So it's a migrant who, instead of sending money home with Western Union, they can spend cash where they live with Pipit at a much more affordable rate. And as you said, Claire is our head of marketing.
So again, we're kind of the specialists of crypto on our end. You guys are the specialists of cash. I think a very interesting question that I want to ask, and I'm sure the viewers want to hear, is cash still relevant? To what extent is cash still relevant? Because obviously we're used to banks, we're used to bank cards, we're used to contactless payments today. A whole bunch of people are still using cash, but like, what amount of people are using cash, and like how relevant is cash in our society today?
Hi everybody. Cash is still relevant, Michael, to answer your question simply. And in fact, the amount of cash in circulation is increasing slowly and has done in a lot of the major economies over the last 10 years. At the moment, statistically, they say there's 7.6 trillion US dollars in circulation. So that, I mean, that's a lot around. I suppose in developments like ourselves, we don't really use it as much, but obviously huge parts of the world, markets in particular, use of cash is thing, and people generally would have maybe less bank accounts. They don't use cards like we would use cards. They use cash for their daily transactions. So they're the people the users of Pipit mainly. And to answer the question again, cash is still hugely relevant for, I mean, even 1.7 billion adults who don't have bank accounts in the world, so still very much alive, still very much used.
Yeah, I was gonna say, is it because they're unbanked, and like if they are unbanked, like what are the reasons for them in being unbanked? Because today, I mean, it's so easy. Well, again, for us Europeans, it's so easy to go and open a bank account, and it's in our daily lives. So it's kind of unimaginable when you say that someone does not have a bank account or cannot open a bank account. It's rare.
Yeah,
I think from our perspective, there's a whole unbanked population in developing markets, emerging markets. From a European perspective, it's easy enough to open a bank account if you're local and settled, but if you've just moved country, it's very difficult. Even within Europe. An example I frequently use is I moved a few years ago from Ireland to the UK, which has no visa restriction. Well, then there's no visa restrictions or travel restrictions. I spoke the language, at a full-time job, and it took me 7 months to get a bank account open. And we got a business account open in 2 days, and the same branch of the same bank, it took 7 months to get a personal account open. My bank card actually arrived in the post the day before I moved home to Ireland. And being a migrant and having moved, I couldn't use my Irish account to pay my rent in the UK. None of the agencies accepted, so I had to pay rent for 6 months in advance to get a place to live. I'm obviously fortunate enough that I could do that, but a lot of migrants who are moving, they're in shared accommodation. If you're moving to work with Google in Dublin, you're on a good salary, but the migrants who are moving for lower income jobs, they're in shared accommodation, and it's getting proof of address is the big problem, because there's only so many bills in a house. And you have to have that proof of address. And even if you're opening an account with Revolut or something like that, it takes 3 minutes to open a Revolut account. But that 3 minutes starts when you've got your proof of address and your valid ID and all your documentation in place. So it's not actually any easier if you're a migrant. So I mean, last year there was $65 billion in cash remitted globally at fees averaging between 7 and 9.5%, which is a massive cost. on migrants trying to support their families, and that's kind of the average Europe to Africa cost. But like within Africa, there's the cost of sending cash is even higher, and the bank penetration of bank accounts is even lower. So,
is it because of technology, or like why is it so much higher in Africa? Well, 7.5 is already huge, but why is it even higher in Africa?
Well, to be very frank about it, it's because they're being taken advantage of. Essentially, the poorer the country is, the more expensive it is to send money there. If you're going to send money from Italy to Asia, it'll cost about 4%. But from Italy to Africa, it costs 9%. There's no difference. It's just, it's a demand thing, really. In terms of bank penetration. So, it's been overpriced. Now there is obviously a lot of KYC elements involved, and with the Western Union model, they are responsible for KYC. So I can send you €100. They have to KYC me, and you KYC being your customer, so they have to do it for ID and all that. But our model, money's going into an account, so the customer's already KYC'd because they own the account. So we don't have that responsibility or that expense, which is part of how we can do it much cheaper.
Well, that's kind of what happens on Nebeus, right? All of our customers are KYC'd, right? And they can, hence they can top up their accounts. They can add funds, add cash to their accounts through cash collection points, which is a pretty unique technology. And I don't think anyone in the industry, in the crypto industry, offers this technology. So again, it's interesting for people who just want to spend their cash, and it's interesting for people who are unbanked and because crypto is very much linked to bank accounts, right? You need to buy crypto, you need to have a bank account to make a transfer of your money to your crypto wallet in order to buy, right? Whereas now we're kind of, let's say, bridging that gap and allowing people to avoid banks altogether and allowing them to add cash directly to their Nebeus accounts, which is pretty cool. And I think it's
very cool.
Yeah.
I mean, just to go back to your question there as well, I suppose two of the main reasons that it's so expensive is because it's such an unregulated activity. It's undocumented and it's unregulated and dominated by 2 or 3 big players who basically can set whatever price that they want. In the last couple of years, there has been a lot more, I suppose, awareness brought to the costs, and the UN have set out a number of sustainable development goals, and one of them is to reduce the cost of remittance to 3%, a global average of 3%. So that's bringing along a lot more, a lot of innovation, a lot of and an appetite to innovate and to find alternatives to banks and alternatives to existing structures. So actually in Africa, where we would have a lot of experience, the Fintech sector is very vibrant and very dynamic at the moment, and customers are aware as well of these high costs, and they are looking for alternatives.
It has seemed like Western Union's changed their fee structure only because of competition, like Remitleys of the world that I think primarily probably send to, say, Latin America and sort of Southeast Asia. But I remember looking at the fee structure for Western Union maybe a couple of years back, and I remember seeing sort of 8 or 9%. I think that's slid down towards maybe 4 to 6% now. I'm not sure exactly, but it's only because of competition after all. And I think it's, Western Union only really, I think they had like a compliance issue a couple of years back as well, where they started kind of ramping up their KYC. But, friends of mine that, I know from Europe that have been traveling abroad, they were getting Western Union. So a lot of different people were using it, not just sort of emerging market people, but also travelers. If they were stuck or, needed some friends or family to send them money, they were using these services, which it seems like over the last 4 or 5 years, the ecosystem's a lot more robust than it was prior.
Yeah, and those remittance flows aren't only going to emerging markets. I mean, there's huge flows from West Europe to East Europe, with Poland, Romania, Czech Republic, and countries like that being recipients. So I mean, it's that what we're looking at in Pipit is, if for international transactions, is that migratory flow. So Where people are leaving, we need banking and e-wallet partners, and where they're living, we need cash-in partners. That's kind of what we're plugging together.
I can imagine students are still in the same boat to some degree. Like when I was a student, I remember I used to use Western Union all the time to send cash from France to the UK. I was living in the UK. I was less than 18 years old. I couldn't open a bank account because I had just moved there. So obviously Western Union was my go-to spot to get cash sent to me.
There's actually a big flow within the UK from London to Birmingham with Western Union and with money transfer, and it's kind of second generation families. So it's the parents moved from primarily India to Birmingham, North England. The next generation are now in university in London area, and there's no bank accounts, so they're using Western Union to send money.
But I mean, why? Question why? Because I mean, you have in the UK, you have like Starling Bank, Monzo, Revolut, all of these.
It's back to the same thing. It's back to having proof of address and language capabilities and IDs that are acceptable.
So basically, they can't get onboarded and they can't go through KYC because of something, because of a block.
Yes. Yeah.
There's also, I think, in some nationalities or in some diaspora, you know, there's a mistrust of the Western way of doing things. There's a mistrust of the Western banking system, and then, you know, it's very much word of mouth. Like if there's an office that's, you know, there's somebody very good in there who they trust, they will continue to use the avenues that they trust, and they will pay a little bit more because they trust them and they're, you know, part of their community. So, I mean, it's not just a black and white decision. I think there are a lot of variables and a lot of traditions and a lot of habits that people have. And like, it's like, how often do you change your bank account? You know, I suppose it would be maybe our version of that, you know, or we'll say people who've grown up with a bank account as the norm. So it's cultural differences, habits, and whatever really your family and your community do.
I think neobanks are changing that. Opening a bank account right now is a lot simpler and easier and faster than it used to be. It used to be a whole process to close, to open. Like I actually don't even have a traditional bank account anymore. I'm a full-blown neobank user, neobank and Nebeus user.
I think the traditional banks are trying to catch up, and what they've done is they've switched as much as possible to online, but they're not. The banks aren't native online, so they're kind of creating services that aren't particularly good, and then they're closing branches, and people are just being forced to use these substandard online experiences.
Yeah, they're opening up. I know a few banks here in Spain that have opened up like young brands that are online banks targeted specifically at millennials and the younger generation, which is kind of mimicking the success of Revolut, Monzo, and the likes, but nowhere near that level, because they still have this kind of, even though it's an online bank, they have this very strong traditional feel about them, and they don't have enough features on their platform, and they still have the same approach of they expect people to go see them. Whereas I think right now, the modern banking approach is banks go see people and banks go and sell to people, right? They like, please open a bank account and we will give you this, if you come and see us. And traditional banks are kind of sitting back and more, at least have been sitting back and have been saying, come and open a bank account. And
in the US, the great research recently, millennials, 90% of millennials who had a bank account had a neobank account of some sort. But of those, about 50% of them had a traditional Wells Fargo account as well. And the reason for that account was security, of having a place to go get a problem. Just that there's going to be a big jump before people will be able to fully go Michael's route and fully trust a place where there isn't a door you can knock on if you've got a problem or your money's missing.
Because it does happen. I don't know the ins and outs, but Simple Bank the other day just shut down. And it's happened before, like these neobanks shut out of nowhere, and there's no deposit protection, and you're kind of, fighting and hoping you're going to get your money back. But with neobanks, with sort of the larger banks, it's a bit convoluted, because prior, about 4 or 5 years ago, there was Hello Bank, I think it was called, in the Benelux region. And their whole thing was, okay, if we can hit a 500,000 user target, we're just going to roll that into BNP. And that's going to be like that's why we're doing it. I don't think a lot of these banks are doing it long term. It's a kind of, take a feature set and roll it into their broader sort of ecosystem, which is not, what neobank users really want. And then, in comes crypto, and the more sort of, stable coin pegs you have in different currencies, and the more off ramps you have. If you trust a neobank, it's not like a far skip and a jump to just trusting like a decentralized network in an e-wallet. As long as it's, I'm thinking in my mind something like Stellar that has, USD, Euro, Argentinian peso, all the way down to, Tanzanian shilling, I think it is. And it's the cost to have that account is nil, and basically the cost to send that money is next to nothing as well.
Mm. But going again, we're speaking a lot about cash. Switching to crypto, but since you just mentioned crypto, Peter, Ollie, like, what's in your opinion the demand for cryptocurrencies in the emerging markets? Right, there's a huge demand for cash, right? Because it's still relevant, it's there, they can't access banks. But what about crypto? Because it's a hot topic, and I'm sure everyone wants in. And it probably, like, blockchain technology will help them solve a lot of issues if it's well adopted inside the countries.
Yeah, it's a very hot topic. With Nigeria being the biggest recipient of remittance in Africa, and India being the biggest receiver of remittance in the world, it would seem to be ideal. But both of those countries have recently put legal limitations on owning crypto. In India, it's up to a 10-year jail sentence just for possessing cryptocurrency. I think the governments don't understand it, so they're going to try and control it, which they're not going to be able to do, I don't think. And banks are probably putting pressure on governments to do that, because the banks aren't making any money out of it, and that's the same as with cash. It costs the bank money to hold cash and to transact in it, but when you're transacting €10 in the shop, the bank doesn't make any money, so that's why they don't like it. It's the same with crypto. If you use Stellar to send money to a family member, or to transfer it from one wallet to another, the bank isn't making a twist. And Nigeria as well has regulated it, or reduced or restricted it within the last couple of weeks. So from what I'm seeing, the banking industry in Africa, for example, is trying to grow. They're trying to grow in a kind of a neobank way, moving very much towards online accounts. But the e-wallet market is kind of skipping that, and obviously M-Pesa and things like that, which kind of falls between a crypto and a currency, I suppose. So there's a lot of innovation, a lot of really innovative companies in Africa and in India, but the banks are trying to get in there and stake that ground, and they're the ones with the resources. So it's a very interesting, active field at the moment.
Well, I think again, it goes back to the reason that traditional banks not adopting to reality to some extent, right? I mean, they're still living in the past and expecting people to transact and expecting to keep the same business model that they used to have, and they're not trying to adopt any like new business models to attract users. I don't know, like introduce like subscription-based models where people will actually get services and like that fall under a list, and they're sticking to their own old traditional methods, and it's clearly not working.
Yeah,
and it's not consumer friendly either. I mean, there's I wrote a blog there recently. I did some research on digital wallets and digital finance and new fintechs, and like a lot of it is still so unregulated, and still so hostile really towards the consumers. You know, like if there's no customer service, if somebody has a problem, there's your FAQ, you know, figure it out yourself rather than, you know, being given somebody to speak to. So, you know, that's kind of, I think, dismissive of customers. But the other big thing, and I think this is more a very important thing, is that like your track record, shall we say, your financial track record on a lot of new banks, they're not taken into consideration for mortgage loans, or, you know, for credit ratings and that. So I think there's a big gap there. There's a big decision that has to be made. There's a regulation that needs to be put in place, because if customers want to use the new banks, or, you know, digital wallets, or bypass the traditional banking system, governments, you know, have a responsibility there to regulate it and protect the consumer as well. You know, so I think the banks are kind of stalling on that as well, because I think they're probably aware of the limitations and seeing what the fallout from that is. I could be completely wrong, but that's just my impression of what's going on in the industry in the background as well.
Well, I mean, in the crypto industry, everything is in process of being regulated as well. So, I mean, yes, CBDCs that are being spoken about in Europe and tested. China's already, I believe, even released their CBDC. In the UK, what the new Britcoin that it was named Britcoin. I don't know if you were aware of it.
Yeah, it's terrible.
It's a good name.
I think it's a good name, I have to say.
Just go back to what Claire was saying there. I mean, up until open banking recently, you know, if you've been living in France for 30 years and you've got a full-time job and then you move to Spain, you can't bring your credit history across the border with you. You know, there is a company. I did we did a Village Capital Accelerator last year, social impact fintech accelerator company, and that called Finclude. We're a Dublin company, and they're using open banking so you can bring your credit history across the border with you. But I think they're the first to do it. So literally, the fact that you got a bank account for 30 years and you can show all your payments doesn't matter, because it was far side of the border. Within Europe, never mind coming across from Africa.
I had the same issue. So I was in London for the better part of a decade, and all of my banking credit history is all in the UK. And when I came kind of back to Canada and was speaking to some banks, I'm fundamentally like an immigrant to my own country when it comes down to it. And they won't look at if I was a complete foreigner. So I hold both, you know, British and Canadian passports. If I was only a British passport holder, it'd be a lot easier. But because I hold that one passport, like, okay, you're exempt from these programs. We won't look at XYZ, and come back to us in 2 or 3 years and we'll see what we can do for you. And that's the sum. And this is talking, you know, developed to developed market. I couldn't imagine coming from, you know, emerging to emerging or emerging to developed. It'd be horribly difficult.
But it's the same even in Europe. I moved to Spain recently, and when I moved to Spain, I couldn't open a bank account for 4 months, because I needed to get something that's called a NIE, which is like a local, let's say, identification number. And even though I'm French and I moved from a neighboring country, it took me 2-3 months to get that NIE, and countless of visits to the authorities. So yeah, and again, I'm coming from France to Spain, which is literally next door. You know.
One of the big migrants in the remittance industry, you know, the US is one of the big senders, but after that, UAE and Saudi are big senders. The UAE population is 80% migrants, but you have to have a particular type of work visa before you can open a bank account. And if you work in construction, hospitality, or domestic work, you can't have one of those visas. So it means they're paid in cash, which means they're remitting cash at this high cost.
But are they paid in cash under the table, or they are officially paid in cash?
No, so they're issued an ATM card. So it's a card where they can withdraw the wages, but you can only use it in an ATM card, a machine. You can't use it in a shop to make a payment. You can't use it online.
Wow. Okay.
I talked to, I was talking to a guy who's migrant services in a bank in Bahrain, and he said they've 250,000 of these accounts, and every one of them withdraw the full amount of the wages on the day they get paid. and then they cross the road and remit it.
I mean, actually, speaking of, Middle East and, that part of the world, 80% of all transactions are cash. And that's kind of hard to, that's not just going down the shop and, buying bits and pieces, a kind of a midweek shop. That's everything, 80%, so again, you have to really think about that and think about where cash is being used and the potential of it for crypto. I mean, there's a lot of people there with a lot of cash, and really excluded from the banking system. So there's big opportunities around.
And I think it's slowly happening as well. I can't remember the exact figure, but Bitso, which is a Mexican crypto exchange, has seen a huge influx of remittance type payments coming from, the States to Mexico, just because they can cash out in peso from the exchange. And I think as like you talked before about sort of like the untrust of banks, it's the same in Mexico, where they do not trust banks. The penetration's really, really low. They operate in cash, and I think even if they had the opportunity to have a bank account, they wouldn't, because they don't trust them because of various reasons I could go into. But it's not too much of a hop, skip, and a jump going from, okay, well, we used to go to a bank, now we use an application. If it costs much less to use crypto to do these remittances, then we will. And I think the other side that people, from developed countries, they don't have we'll see the next sort of like 6 months, but we don't have huge inflation in our currencies. We'll go back in 6 months and we'll see the inflation in both the Euro, USD, and everything else. But you also hedge against inflation or increase in prices across the currency pairs. So in Argentina is a great example. Is they're using like USDC or DAI to basically park their money. And when they need to pay rent or expenses, they move that into Argentinian peso, and they don't have, the risk of their money being worth, something one day and less the next.
I think the crypto world has certainly become much more legitimized over the last few years, and that will hockey stick with acceptance, and the likes of Bitcoin, to me, really seem to be a commodity at the moment as opposed to a currency. But the stablecoins you're talking about have actual utility. People can use them.
Well, I think the biggest point is that they don't have any volatility, right? Bitcoin is volatile, and people hope that it's going to increase in value. So today, no one wants to spend their Ethereum, Bitcoin, or any other currency that they hope will increase in value. Stablecoins is a different story. It's like $1. So sure, you can spend it. CBDCs are going to be the same. But how will they fit into the whole crypto picture? That we still don't know. It's a total gray zone. They're being developed. They're being talked about. What will be their purpose? How will they be used? Will they be adopted on cryptocurrency platforms? Will people be able to trade crypto to CBDC? Unknown. Will stablecoins still be available once CBDCs appear? Probably yes, but again, how will they fit in? How will we be able to trade like US dollar CBDC to USDT or USDC? Probably yes, but again, it's such a gray zone. But yeah, I think the biggest point about crypto is that people initially wanted to spend crypto, but they're looking for this one currency or a solution, right, that will allow them to spend their crypto because it will always remain at the same value. That's it.
Yeah, there's a whole sort of you'll have your government issued digital currencies. You'll have ones that are pegged to the currency that's one-to-one stored in the bank, and then there's more and more programmatic stable coins like DAI, like UST from Terra, like more and more. The only question mark with those, I know the EU came out and said that stable coins are going to have to be sort of regulated by, let's say, the central bank, and who can issue them and how they're going to issue them. And so it's been always kind of like Tether. There's always been, kind of question marks around if it's backed, sort of one-to-one, and how that structure looks like. But I'm sure there's going to be sort of a conflict. And at that point, speaking of, let's say, DAI, which is a fairly well-established one, people may want to use DAI versus, Bitcoin, for example, or a US control, because I think, with digital currencies coming from governments, I think it's more about control than it is about, easing friction and using cash, let's say.
Yeah. Control is the main, I think, the main point here, especially for multiple governments. Europe is one thing, but if you look at China, for example, that's a whole different reason. They'll be able to track every single transaction that happens, and that's Facebook? Was it Lira? Facebook?
Libra.
Yeah.
Which I think has been rebranded again. I don't even know. I know it's still ticking over, but I have no idea.
Is it still happening? Like, are they still actually planning it?
I think so. I think it's rebranded again. If I could be wrong, but it's still in the works. What the actual use case is, I haven't seen anything in the news over the past year about it. There's been other things kind of dominating the crypto space versus, I think the idea, the reason why it was stopped, because they wanted to be like a new kind of almost central bank in Facebook ecosystem. But then it's also for debate who still uses Facebook.
They got so much scrutiny, because imagine, like, right now, like, people don't trust Facebook because Facebook tracks your activity, right, or whatever you say, or again, people have all these thoughts. Imagine when you're using Libra, right, and you're paying stuff with it. Facebook will know exactly what you're buying, when you're buying, and that's the scrutiny that they got, and that's why they kind of, let's say, one of the reasons why they put the whole project on hold, because it's just it's too transparent. Yeah.
Well, you could argue that about, depending how down the rabbit hole you want to go, and same as a Coinbase, right, or any sort of centralized exchange per se, especially in the United States, because if they request something from Coinbase, they have to give it to them, which gets into a whole other side where if you're doing things right, it doesn't matter anyway. But the people that are kind of crypto maximalists, do like a bit of anonymous activity and maybe don't want the government knowing XYZ. But I think that's a whole other topic.
You're talking the control of government, like the control of economies, and from what we always get put up to us in Pipit is, what about the cashless economy? And Sweden is always the example that they're the fastest approaching the cashless economy. But their government has kind of recently realized, well, if there's no cash, who exactly is controlling this economy? And the neobanks you mentioned there, Peter, disappeared, but quite a few other banks have disappeared in the last while as well that were much more established. So like Sweden have now mandated that there has to be cash in the economy always, and that cafes and bars and restaurants have to accept cash to make sure that the government isn't losing control the other end by not having any financial controls. They lose them if they're not managing the cash in the economy. Which is the other extreme from the China example.
So in your opinion, question, in your opinion, will there ever be a cashless society?
Not anytime soon. Not anytime soon.
I hope not. I think, well, and not just because of Pipit, I think just for society, and for all the reasons that, of that you're all speaking about with control. But if from a very simple example, you're giving your niece or nephew a birthday card and you want to just put it like €10, €20 in it. What are you going to give them? A gift card? There's lots of reasons, but also, I mean, it's secure, it's anonymous, you can just spend it any way you want, and there are a lot of people who are very conscious of that and don't want Big Brother looking over them and knowing every single penny that they spend, and what Ollie's saying there about Sweden, in fact, I read an article there last week or the week before that they're already seeing an increase in the amount of cash in circulation in Sweden. People can be kind of led by the nose and by convenience and told that everything is convenient, but when they're told the opposite as well, wait a second, if this is the road you're going down, this is what you're going to lose. you know. So I think there's a lot of benefits of having cash and having a hard currency.
Claire's right, and the big restriction with cash is that, you know, you can generally only spend it when you can hand it to somebody, actual cash. So that's the problem we're solving with Pipit. You can now spend cash wherever you are for something somewhere else.
Yeah.
True. But at the same time, with crypto, you can hand someone crypto from like a decentralized wallet to a decentralized wallet, and that's like if I send you a Bitcoin, you will receive that one Bitcoin that I actually sent you. So it's the same thing, but it's just virtual, digital.
The other side of the coin. You missed a big chance there for.
Yeah, but again, like I'm a very like anti-cash person, to be honest. Like I have a 10-euro bill in my pocket that I've been carrying for around for the past 2 weeks because I don't really know where to spend it. Because if I don't spend exactly 10 euros, and if I spend like 9 euros, 59 euros, 58, I'm going to receive some pennies. Then I'm not going to know what to do with those pennies. So I rather just not spend it unless I have exactly a 10-euro bill. and even going back to like the gift cards that you said, like I'm a very like again digital person. Example, not with gift cards, but with, let's say, books. If someone like wants to give me a book as a present, I usually say, no, please don't give me a book. Give me an Amazon voucher for a Kindle ebook, which is I just receive it on my email and I can go on and click buy. Again, but I'm probably, I don't know, I've been like this for a long time. I think more than
my first business was a bookshop, so I'll always take the book.
Well, I'll use both, to be honest. I don't want to own every book, and I don't have enough bookshelves. But there are still books I want to own, and I'm an avid Kindle reader. But you know, there's a difference. It depends on the book. But you know what you're saying, and a lot of people are like that in the developing world. But in emerging markets, it's somebody would look at you and say, what are you talking about? You know, there's just such a completely different mindset, but there's a lot of that in the world, you know, and everybody should have the facilities and the security and the flexibility to either use cards or use cash and be as regulated and as secure and as you know, cost effective as is possible, I think. And there's a lot of that. There's a lot of positive thinking on that. I mean, and the UN, the UN goals that I mentioned earlier by 2030, you know, there's a lot of awareness of the inequities in the world and the disadvantages and the exclusion that people are suffering outside of the digital world, and to bring them in, you know, and into the digital world, and that's kind of where we sit. And there's a lot of appetite and a lot of goodwill towards that as well.
A crazy example of cash that I wanted to just bring to the table, get your comments on it. You probably know more about this than I do, is Somalia. And Somalia and their actual, let's say, the cash that they use, like say you go to Somalia today, you change, I don't know, 100 euros, you're going to get like 1 trillion of their local currency. And people actually go to exchanges, cash exchanges, physical cash exchanges, and they carry cash out in crates because their cash is so worthless. So from that sense, cash is kind of, they're all using cash. They don't have bank accounts, but at the same time, using that cash is so crazy, because they have to carry it in crates, or at least tourists need to carry it in crates.
Yeah, and look at the security risk that those people are facing carrying a crate of money. You know, they can be robbed, they can be injured to get the money. You know, so I mean, and like crypto will help with that. I mean, like the mobile phone, they mightn't have a bank actually near them, but they certainly have a mobile phone. You know, and that's mobile phones really have accelerated financial inclusion in Africa, or you know, in other countries where bank account ownership isn't as strong. So I mean, that fits very nicely, I think, in with crypto. If it's a mobile money wallet, why not, you know, crypto as well?
but they still have the problem of adding funds to their crypto wallets.
Well, we're working on that.
We're working on it, yeah.
Our global footprint is growing.
We don't have any partners in Somalia, yes, but
well, not for
Yeah.
Somalia, but we've solved that problem. We've merged crypto and cash, right? So people can,
Yeah.
thanks to you guys, people can add cash to their Nebeus accounts, right, and start buying crypto, holding crypto in their
Exactly.
crypto wallets, right, using crypto services, accessing financial services, right? We offer that right now as we speak. So if anybody is here from a developing country, from Somalia, especially, please try Nebeus. Yeah, although I believe we don't have any cash deposit points right in Somalia yet.
no, but we do in Kenya, which is across the border.
Close. Close. So in the long run, again, we've been talking for a while. What do you think will happen? Is it cash? Because again, the name of this event is Cash versus Crypto. It's actually cash versus crypto in 2021. So first of all, let's identify what wins in 2021. Is it cash or is it crypto, or is it both?
I think they're kind of, in some way, they're both outliers in the current financial industry. You know, the cash is old school that the industry is trying to get rid of, and crypto is new school that the industry doesn't want. Because of what we said earlier on, that there's not money to be made out of it. Shifting cash from bank to bank is making lots of money for people. But as we can obviously see, there's a requirement for cash and a requirement and a demand for crypto. So I don't see them as mutually exclusive propositions, and I certainly don't see that changing too soon anyway.
I personally think that the two will always coincide. Right, the cash is going to exist in emerging markets in Europe. The pandemic has obviously affected cash in Europe, especially. People have started using contactless payments more, but it's always going to be there. I think we will see a change in 2021 or in the future when, as we already talked about, CBDCs, when CBDCs are officially introduced. But again, as I mentioned, gray zone, we don't know how it's going to happen, when it's going to happen, what it's going to affect, how it's going to affect it. So we'll just have to see. But post 2021, I believe that we will see a shift. And I think that, again, 50 years from now, we might be more cashless than we have cash today. But that's a long time from now.
I suppose on that point, I mean, we've talked a lot about developing markets, you know, and migrants and, you know, people, I suppose, been excluded from the financial system and living in emerging markets. But it's very important, I think, as well to say that, you know, we've done a lot of we research the cash market all the time, and you know, in the US, we have, well, first of all, we've cash-in points in Europe as well. We've obviously got cash-in points in the UK and France and Spain, and we're growing across Europe. But like in the UK, what is it, 9.3 billion cash payments were made in 2019. It's not just developing nations. I mean, there are people in Europe as well who prefer to operate through cash, or that there are certain things that they do with cash. In the EU, in 2019, 54% of the value of all transactions was cash, you know. So I don't think it's going anywhere for a long time yet. I think people like it. I mean, Germany, Switzerland, they're very cash-based economies as well. You know, they like their cash. They like to use cash rather than invisible digital currency. So
actually, they have their German local cards. Actually, like I remember when last time I was in Berlin, they didn't accept a payment that I wanted to make in a restaurant with my Visa or MasterCard. They said no, only German local cards.
Yeah, or cash.
Or cash.
Yeah.
Or cash. And I was pretty surprised because again, like this wasn't a small city, a small town in Germany. This was Berlin, which is like one of the number two, or actually now number one tech hub in Europe, because the UK left. So London is no longer part of Europe. So Berlin is number one tech hub in Europe.
I just had an experience last year in Lisbon. A lot of places wouldn't accept my Irish Visa debit card. It had to be a Portuguese card. So I mean, even within the most developed financial region of the world, in Europe, there's still a ways to go for banking services.
Mm-hmm. Mm-hmm, mm-hmm. Yeah, and Claire, you mentioned US briefly, and one thing I can add is that in the US you have a huge number of people that are unbanked because they can't open a bank account due to having low and poor credit scores. Which doesn't mean that they don't have money or that they're fraudulent or can't go through KYC. They just can't open the bank account because they have a bad credit score.
Yeah, exactly.
That's it. Yeah. Peter, is that I think you're on that side of the world. So is that correct?
Yeah. So in Canada, their banking systems, well, it probably mirrors the States, but it's actually even more conservative, and that's what they kind of pride themselves on. Conservative just means sort of a dinosaur, realistically. But it's not easy. There's only like 4 or 5 sort of banks, and that's how they operate here in Canada. So like they still use checks in the States a lot, and they still use checks here, which is surprising, especially coming from Europe, where nobody uses check; they uses bank transfer. So, for example, here
France still uses checks often.
Well, that's semi not surprising. But like my limit to send money, like do like an e-transfer is like 3K Canadian, which is about like £1,700 per day. Why? No reason, just because that's the limit. So yeah, again, like I agree with Claire's point. We talk about sort of developed versus kind of emerging economies, but it's not really the case. Like we're not that further ahead. And to be fair, there is actually arguments that developing countries with newer infrastructure are actually poised to almost leapfrog because there is no legacy system. They can jump right to e-wallets. They can jump right to sort of crypto, and to the point of which is going to win. I think both are complementary, because for 99% of people, you still need like a cash on ramp and cash off ramp, whether getting money in or paying normal expenses. Obviously, you can get a loan and whatnot, but even getting a loan through crypto collateral has a sense of sort of education in the crypto field. So for the bulk of people, they may use crypto to hedge against price or currency devaluation. They may use it for speculation, but again, it's still not completely seamless, which is obviously what we're trying to move towards, is a much more seamless experience and sort of a venue that people are used to.
And just, I suppose, the final thing I'll say on cash as well. I mean, we've just been through a tricky year globally, and like recent reports in the UK would say that, okay, ATM withdrawals in number has gone down, but actually in value has gone way up, because people are actually taking their cash out of the bank and they're keeping their cash, because a human instinct is to store and to save cash in times of stress, and there's nothing that happened really to indicate that people's money was at risk at banks, but it's a human instinct to save the cash, and I don't think that'll go anywhere for a long time.
Interesting.
It's a classic example of how it's portrayed in, all the media in the UK will tell you there's been a huge drop in the number of transactions in ATMs.
Yeah.
But they will not tell you that the actual money, the amount of money taken out has gone up.
Yeah.
Interesting.
Exactly.
I would say that the number of transactions has decreased because the withdrawal fees are significant. But the fact that more amount of money has gone out is an interesting statistic.
It is, yeah. Yeah.
Interesting. We'll have to see where this goes, but yeah, I think cash is here to stay. Crypto is here to stay in 2021.
Pipit, Nebeus are here to stay.
Oh, that is definitely true. We're definitely bridging the gap between these two worlds, and hopefully we'll continue doing that, and we'll create even more new ways, new exciting ways to do that in the future.
Yeah, I think so.
Good. So I think let's stop there. We've been talking for a little bit less over an hour, I would say. So for everyone who joined this live stream, thank you for joining. Check out Nebeus's website, check out Pipit Global's website, follow our YouTube channel, and stay tuned for our next Fireside Chat event. Thank you so much for attending. And
thanks, Michael, for inviting us.
Yeah, Ollie, Claire, thank you so much for joining. It was a pleasure. I really enjoyed the conversation. Peter.
Thanks, everyone.
Yeah, Peter, thanks as well.
Thank you. Bye.
All right.
All right. Thank you. Thank you. Bye-bye, guys. Bye.